Stephen, you heard Emily's report. The government shutdown is a big factor. Tariffs are a big factor. The economic uncertainty is partly behind the drive for the markets lower. What exactly is the economic outlook doing in terms of your investment strategy?
Well, since late last year, we've made a couple of reductions in U.S. equities, generally pushing the additional assets into intermediate or shorter term treasuries. We think that there's been some distortions to the U.S. economy already. We've had a massive surge in imports, which is resulting in, again, a lower GDP count for the first quarter. That's not that material. That's, of course, to get ahead of the tariffs. But the chilling effect on business confidence and sort of seeing production likely and maybe investment moderated to the second quarter is a problem. Then if you think about it, I mean, American importers, you obviously saw retailers just a little while ago. Again, this is a fiscal tightening for the U.S. Now, this isn't everything, of course, but we really don't know. Are tariffs going to amount to an incremental $100 billion? $400 billion. This is all in the range of possibility. So there's just tremendous apprehension about the outlook until at least April 2nd.
Stephen, I was having a conversation with a Fortune 100 CFO just yesterday, talking a little bit about what we're seeing in the American economy and whether or not there's anything deeper that could happen. We are by no means in a recession. It doesn't look like we are in a recession anytime soon, but there are some tea leaves. There are some initial signs that things could be slowing down. And I had mentioned fuel prices just before. I saw them this morning myself. What exactly is your view on whether or not there is the potential for real downside risk in the economy, because we're not seeing it just yet?
So there's really no good reason to have a self-reinforcing economic collapse. The industries that have to pay a higher tariff, for example, shouldn't create so much weakness that they pull down healthy industries with them, that everything has to go down. Like, if you consider the fact that stable taxes, deregulation, we saw a surge in business confidence into the end of last year. We're peeling that back now. There was a bit of a rise in inflation in the early part of the year. Consumption expenditures were weak just as we were pulling those imports. You know, that would suggest some weakness just ahead as we start to pull down production. But the real question is, are we going to pass through tariffs that are at least 10 times larger or something of that magnitude than 2018? Is some of that going to get into consumer prices? Is that creating a drop in confidence that the business sector also has to reflect, right? So these are the dynamics. I would just tell you, though, I don't think that we are in a self-reinforcing collapse. It need not be that bad. If you keep piling it on, though, even a pretty healthy economy can slip.